We've had Craig Stobo on our show on a number of occasions talking about a number of things from a commercial perspective. But in only one of the numerous hats that Craig wears is the chairperson of Wind Farms New Zealand. And we've been talking about the emissions trading scheme, which for most of us is something that sort of is in the periphery. It's out there. It doesn't really have a genuine relevance to us until the government of the day, whichever it will be, starts to change things that affect the cost of whatever we're buying. And that's when we'll know that the rubber's hit the road with the emissions trading scheme. But for now, for most of us, for the 99% I would suggest of New Zealanders, it's all sort of out there. It's in some sort of Stygian mist. And we know that it exists, the emissions trading scheme, but if you asked us what it was, you wouldn't have told. Well, over the last few weeks, Craig Stobo has introduced us as a listening audience to exactly what the emissions trading scheme is and how important it is considered to be in terms of New Zealand meeting its international obligations related to climate change. But then the next instance, which Craig's been talking about, is when that finally hits the road in terms of affecting our daily lives, what it means to us individually. Well, the government got caught on that. Craig's talked about it and opined about it a long time ago, saying that the auction system that they were using for the emissions trading scheme had failed, I think twice in a row, and that the government's emissions trading scheme was in tatters because it was so reliant upon this auction system. Well, a group of lawyers took off to the High Court, I think it was. Yeah, it would have been the High Court, not the Court of Appeal, and successfully challenged the government over the way in which it operated the emissions trading scheme, and won. And as a consequence of that, last week, the Minister of Climate Change, James Shaw, updated the scheme's settings and says still that the emissions trading scheme is a key tool for New Zealand to meet its climate change obligations. To talk about that and to tell us what actually happened, why, and what the effects are, we are joined by Craig Stobo. Craig, thanks very much, mate. Welcome to the show.
Hello, Michael. How are you?
I'm well, mate. Okay. I think I've explained all that. A group of lawyers managed to go to the High Court. It was the High Court, wasn't it, Craig?
It's the High Court, yeah.
Yeah. And the High Court said, excuse me, the government, you're not following your own rules, and in particular,
Correct.
And you've turned down the advice of Dr. Rodcar and the Climate Change Commission as to how this should operate anyhow. And the High Court judge said, that's right, you are, and off go, think about it again. And I think did it surprise you what the reaction of the government was to that court ruling?
Yes, so just to be clear, the High Court ruled on the 13th of July. In fact, they ordered the government to reconsider the ETS settings, emissions trading scheme settings, which were at that stage inconsistent with their emission budget. So it's a pretty clear order. And to our surprise, very quickly the government folded midweek last week and reinstated the scheme with slightly different settings. But the arbitrary nature of the result last week is sort of twinned with the arbitrary decision to suspend the scheme despite the Climate Commission's clear preferences late last year. So it was extraordinary that they moved so quickly. So the key thing here, I think, is that the settings will continue into the September auction. So there's no change with current settings. So I'm a little bit cynical about that, but the new settings, and I'll describe them in a minute, will occur from the December auction, where the initial trigger price for the government issuing new units is now $173. It's quite a long way away from where they were hoping to issue, sub $90. So they're clearly letting the market do its own thing, and as a result of that, the secondary market price rose pretty quickly to $65. So the market's already reacting, which is good. So, but I think people were surprised, you're right, about how quickly they caved. So just so everyone understands, higher carbon prices results in a move by industry to decarbonise, and we don't need subsidies to do that. The carbon price is telling us that. And that increases the demand for electricity as opposed to fossil fuels. It increases the cost of backup generation. It increases the cost of wholesale prices, electricity prices. It leads to more renewable energy demand, which is generally the design of a emissions reduction scheme, isn't it? We're trying to move to renewable energy as a solution to get to that Paris Agreement.
Right.
So, yeah, quite surprised.
Well, I mean, whether you agree with this is the way to do it or not, it's a policy issue. We can have that debate. We're talking about how it operates in reality.
Correct.
And I guess the reason for your cynicism would be the reason for mine too. The reason they left it until December was because they don't want an election to get in the way, do they?
Correct. That's right. That's exactly right.
And then that's the question too for you, Craig. What is the effect likely to be when that December auction comes in and presumably the carbon prices per unit will lift significantly from that low of $33 a unit to whatever it's going to be? Now we know the bottom price can at least be $60, so it's almost doubling. What is the significant impact going to be for me and my family as a consequence of that?
Yeah, so you'll see it through emitters in the system. So that's a whole lot of businesses that you can pick up on the government's websites who will be paying more for carbon as their offsets to their emissions. And they'll have to price that into their cost of goods and services. So whether that's a small aeroplane company, whether that's a trucking company, it'll result in higher prices for goods and services that are affected by those businesses' needs to buy those carbon units. Now, the offset to that, what we don't know about, of course, is the actions of those who are happy to sell units. And they are our forestry businesses who have the right, with accumulated units, to sell those at different prices. So it's not necessarily the case that the pathway is a smooth upward trajectory. It does depend on market participants, and some will decide to sell some of the units at $70. Others will want to buy lower down, etc. So it will be up to the secondary market. But it's very clear now that the ceiling is much higher, at which point the government will issue units. So that leaves a lot of room for markets to operate without government interference.
Right, so just to explain that again, so the forestry companies who are creating the credits, so you have to buy their units to offset your carbon emissions, they could just sit there and go, well, I'm going to wait. I think I can get more than $70. I think I can wait until it goes to 88, maybe even $90, yeah?
That's right. And some may decide that the outlook is very promising and decide to plant more forestry. So I'll acquire more land and I'll plant forestry. So those decisions will be based on risk preferences by shareholders or owners of land or forestry to decide what they do with their assets. And it's entirely a private property decision. They'll have to make those decisions depending on their own circumstances.
Now, we've talked before on the show, Craig, about the fact that New Zealand, I think, and one other country, you'll be able to tell me which one, are the only two countries that have used, if you like, carbon forestry in this way to create these credits. Have I got that right?
Yeah, I think the trial was China, and I think California may have a scheme as well. But by, OECD country standards, yes, we are the only country that has the opportunity to plant forestry as a carbon unit production mechanism. That's right.
Just take me back to that decision, though. That decision has been made and is signed up to by both national and Labor governments?
Well, everyone's on board for Paris 2030. There's some movement going on, though. One was the decision by the Labor government in December to alter the ETS settings. That's now been reversed. National has decided to push out the entry of agriculture into the ETS for another 5 years to explore other technologies and other ways of solving that methane issue. But there is concern, and there's a review underway by the current government around the impact of the scheme on forestry plantings in rural communities. Obviously, there's pluses and minuses depending whether you're a forester or not, and how that affects our communities. But that review's underway. So there's some concern about that. But there's a huge embedded interest of existing foresters who have signed up to the scheme and are planning and planting. You'll appreciate that the scheme is used by businesses who have planning horizons gentailers, our foresters have variously between 1 and 25 or even longer year time horizons. So the impacts of these price changes and policy changes are enormous and shouldn't be underestimated by either government. So if there's a need for change, let's have some transparency around what the issues are and why we should continue with forestry credits, not arbitrary decision making which upsets price paths and people's investment decisions.
As you say, I mean, if you're planting a forest and you're selling it to investors, New Zealand or international, and you've got a 25-year time frame, obviously it is a massive decision, an investment decision to make. I notice already, and so will you have, Craig, that Maori interests, particularly on the East Coast but elsewhere, are pushing back very strongly against any limit to carbon forestry.
Yep, exactly. And I'm not identifying any particular group because there are many types of forestry owners, both from offshore and domestic, families to corporates to corporations. I think they're all in the same boat, being concerned about what was given to them in a very clear message when this scheme started, the late 2000s, 2008, 2009, that forestry was a critical part of the scheme, and there'll be a lot of opposition to change, that's for sure.
So have I got this right from a political perspective? I'm sitting there as the government, whichever government I am, and on the one hand I don't want carbon forestry to take over New Zealand agriculture and horticulture because that's just not good. But on the other hand, this is my primary mechanism for me to meet my international obligations regards carbon emissions, yeah?
That's right. It's your emissions reduction plan, your own process. Some other places have got carbon taxes, etc. But we've chosen the ETS and we've chosen accreditation via forestry. That's our particular scheme to get us to our first step, which is 2030. Now, that's the bigger question, isn't it, which I relayed to you and your listeners a few weeks ago around the taxpayer cost if we do not meet that 2030 target. So the scheme's now back in place, fantastic. That will help drive emission changes over the course of the next 6 years, but it is only 6 years to get to 2030 from here. And there's some concern in my mind that we will not make 2030, and Treasury's already opined on the costs of missing that target, which is an enormous impost on taxpayers. And I just struggle to understand the politics of why the public would agree to a purchase of emissions trading units in Europe to mitigate the cost of us not meeting our 2030 target. So, it's an enormous fiscal cost. I think I mentioned to you between 3 and 23 billion, which is in the budget papers for this year. And I'm just not sure the public understands the cost of the miss. And the risk is transferred from emissions polluters to the taxpayer.
Yeah, I don't think the public understands the emissions trading scheme full stop, actually, quietly.
But if you put the price of the transition in front of people, they do get it. But we need to explain that. I was surprised by some of the feedback from your listeners a few weeks ago that even the politicians don't understand this. I mean, it's really important to get this well understood by the public because there's a huge fiscal cost if we miss it. And there are behavioural changes that will happen because of the rising cost of carbon, which will affect the cost of living, which I think was one of the reasons why the government decided to suspend things back in December.
Now, just further on that issue, you're chairman of New Zealand Wind Farms, which is the Palmerston, you own a good number of those Palmerston North hillside units that are now, I see, part of the reason that the Spanish soccer team fled Palmerston North, Craig?
I'm not sure it's
Well, it's one of the primary tourist connections is go and have a look at the wind farms. But from your point of view, does the emission trading scheme mean that the electricity that you produce is going to be more expensive?
Well, I think the demand for electricity as the end point of the transition from fossil fuels puts load on wholesale prices, which leads to like I was saying, how can we invest our shareholders' cash and other shareholders' cash into developments to produce renewable energy, whether it's solar, wind, etc., which means that we can meet the demand that's going to come at us as people move away from fossil fuels. So that seems to be inevitable. So the renewable sector is active in New Zealand, whether it's offshore wind, onshore wind or solar. There are lots of logistical issues, of course. There are consenting issues, but it's pretty clear to me that the government's decision to allow effectively the carbon price to float, the carbon unit price to float, with markets driving the price means that we've got more confidence that a higher carbon price will mean a shift from fossil fuel to demand for renewable energy, electricity. And that means NZ wind farms and others, gentailers and others that are in the marketplace, are going to have to continue to invest to produce that renewable energy.
So a gentailer is a generation retailer?
Yeah, generators are also retailers, but there are single generators and there are obviously single retailers. But in general terms, the electricity industry is going to need to continue to invest in renewable energy to meet the demand for electricity at the probably a higher price part, driven by the carbon unit trading price rising slowly, as per the Climate Change Commission and the Productivity Commission forecast.
Okay, so I'm presuming three things from that: the price of my petrol, the price of my diesel, and the price of my electricity that I consume will go up. Yes or no?
Well, the first two, yes, until the shift to alternative uses of energy, such as batteries or electric cars, for example, changes. So there's a shift to happen there, which is underway. And secondly, it depends on whether investors are willing to put money into more renewable energy projects to produce more electricity. So there will be a supply side response. There will be a response by investors to say, look, this price path is attractive. I will invest in wind farms, or I will invest in solar, or I will invest in offshore wind to produce more electricity to take advantage of that rising price. So there will be an offset. The difficult thing, of course, is time horizons. You can't just build a wind farm in 2 days. It takes a long time. So there will be a lag, which means the electricity price will move around a bit until those new projects come on stream.
When you say move around a bit, do you mean go up?
Well, I mean, yes, it depends what those foresters do with their units. As I said before, it depends on the emitters using the scheme and their willingness to adjust themselves. Can they reduce emissions and therefore not have to buy units, for example? So all those changes will happen as the carbon price rises. So when I say move around a bit, the trajectory is clear from the Productivity Commission and Climate Change Commission. It's upwards, but I'm not saying it's in a straight line because there'll be offsets on a daily basis.
How long does it take to get a wind farm from your mind and the board's decision through to operational?
Sure. Well, I'll just use our example. So we applied for a fast-track consent, still incomplete, but it takes about 20, in our case, 21 months. But if you didn't have, that's just to get the consent.
Oh, okay.
So you haven't started building or doing roads or infrastructure. And if you didn't have fast-track consent, you could be 5-7 years. So the obvious question on the table is, who would ever want to go back to slow-track consent, which is our concern around the revised RMA2. Who would ever want to go back to that when the fast-track consent at least is faster? I mean, it should be a lot better than 21 months. So you've got to do a lot of consultation with affected parties, but why would you ever go back from fast-track consenting ideas to a slow-track? It's just ridiculous.
Well, is the suggestion that the replacement of the RMA, is it the Natural and Built Environments Act, I think, or bill it as it is at the moment, is the suggestion that will make things longer or slower or faster in terms of consent?
Well, I've just noted some of the opinions coming from legal colleagues who have very clearly said that the cost of litigation will rise with the new RMA. You know, why do we put these obstacles in front of ourselves which nobody wants but leads to income streams being put into the hands of intermediaries who are doing their job, but it doesn't get the consents done in an efficient manner. So the parties that I can see at the RMA2 are pretty much the same parties at RMA1, plus litigators. I just think we're in a worse off position.
And from the view of the average family who is struggling already with inflation, obviously cost of living pressures, supply side, which don't appear to be disappearing very quickly, Craig, you add this into it, the consequence must surely be that a declining standard of living for your average family as all these policies come into effect, yeah?
Yeah, the cost of living must be at the forefront of all the political parties in Wellington. How do we help families better education so they can get better jobs? Affordable housing are two things that I think are critical to help people over the medium term get to a bit better position. In terms of the next, 2, 3, 4 months, with inflation still pressing, 6% or so, it's really difficult. And those that are facing, the letter from the bank around the mortgage increase that's coming to people's email or letterboxes will be another impost. As the Reserve Bank Governor said earlier in the year, we need to cool our jets. And that's definitely happening. And the adjustment is not going to be easy.
No, it is not.
So what are the tools we've got to be able to do that? Well, you kind of look to some of them from our leaders to focus on things that matter for our people. And investment in infrastructure, yes, if it leads to more efficient outcomes, but that takes time. There will be some fallout from this adjustment phase for sure, which is important to have government support networks to assist people to transition. But there are lots of things that needs to be changed, including, the reviews of our education system, the reviews of housing affordability, which goes to RMA costs, which goes to the way our cities are built and planned. So there's lots that can be done, but it's not going to affect things in the next 2 or 3 months, is it?
No, but in the short term, and I'm thinking particularly of that December auction, Craig, then you would expect as a direct consequence of the higher prices being paid for carbon units there, or emissions trading units, that there is going to be an increase in the costs that the people who participate in those auctions are going to be feeding through to the general populace, and that would be, as early as Christmas, wouldn't it?
Yes, that's correct. Well, the secondary market can move well before the auction, so there may well be upward pressure on that carbon price between now and December without the government being involved. The government only gets involved in creating more units if that trigger price gets to that price that I mentioned earlier on, which is $173. So that's the first trigger point. There's another one further up, but that's where they'll create more units to provide supply. But it's not clear exactly from here, because of the different market participants, how quickly that price will rise. But the thesis on the table today is that higher carbon prices, now enabled by the change from the Crown, will lead to decarbonisation pressures, which means a shift away from fossil fuels to renewables, which will increase the demand for electricity as a means for energy, and which means that the wholesale prices in the short term for electricity will rise, which will impact on people's electricity bills and those that use electricity in their businesses.
Craig, thank you very much. Oh, just before you go, mate, and a completely left field question. You're taumata of the Otago University Business School. You've just rebranded Otago University. I can't say that's gone down particularly brilliantly with alumni. Your thoughts?
Oh, it's still the University of Otago for me. Happy with the strapline. We have 2 languages in New Zealand, so the logos don't change too much. I'm not an employee of the university. I'm a volunteer, a pro bono advisor to the business school. I wasn't involved in the discussions around that, other than being an alumni. But happy to see University of Otago prominent, and also described in Te Reo as our second language.
Yeah, I don't mind that either. It's just I'm struggling to see why they got rid of a particular symbol that had been there since the formation of New Zealand's oldest educational institution.
Yeah, it is our oldest, and it's our most nationwide, comprehensively cited university in all 4 cities, and it's arguably our best residential university. So yeah, you take notice of these things, but I guess time doesn't stand still, and if people accept it, then it's not going to die in the ditch over it.
No, but as I've pointed out to people, the international rankings of Otago University, which is New Zealand's second highest ranked university internationally, there are 16 or 17 universities in Australia that are ranked ahead of Otago University. Why have Australian universities gone ahead so much over the last 20 years and New Zealand universities dropped?
Yeah, I think Melbourne's in the top 10 from memory.
Yeah, that's right, yeah.
For example. So, not a good outcome, slippage across the board, I think, in all our universities. What's the reason for that? Well, there's a range of indicators used to get to the results of those surveys, including student feedback, quality of the courses, research papers. So we're just not competing, are we? We're not being competitive enough with our Aussie peers. And that's a facet across a number of parts of our economy where we're not competing. And that competing element is important. To say that, in our PISA rankings, for example, that although we're dropping to number 27 for having the previous education minister say, I'm pleased for those in other economies that are rising, this tells me we're waving the white flag. I just don't accept that. I just don't accept that as a strategy. We have to compete in the world, and our kids need to have the best education here, otherwise they'll go to schools and universities overseas. You certainly can't attract international students to New Zealand schools with a domestic qualification that's not transferable to other marketplaces. The NCA is not internationally comparable. So if you want international students to come into New Zealand, you need globally competitive courses and you need globally competitive qualifications. There's no question in my mind. And education is the pathway to get people into better incomes, into better lifestyles, and to manage their cost of living over time. It is critical.
No, you're not wrong. Craig, thanks very much for joining us. You have a good rest of the week, mate, and catch up with you next week.
Okay, thanks a lot.
Look out yourself. That's Craig Stobo, Chairman of New Zealand Wind Farms. He's not Chief Executive, by the way. I've noticed that he's the Chairman of New Zealand Wind Farms and Chairman of just about a whole lot of other things. For those of you who didn't have just been introduced to Craig, actually last week he was also Chairman of the group at 1 Queen Street, where the shooting tragedy occurred. So he is Chairman of the group that was doing the refurbishment of 1 Queen Street, which is that foundation building at the bottom of in Auckland. All right, after 12 o'clock, we'll be talking, what's gone down politically over the week, what's about to happen with Hillary Culver after 12 o'clock. Also, your calls, obviously, after 12 o'clock as well, including on who's responsible for scams. Is it the people who are scammed, or is it the people who are meant to protect them? And are the banks, rapacious as they might be, no more rapacious than supermarkets or Air New Zealand in my view, but that's, are banks responsible for protecting you from your own idiocy and gullibility?